All right, welcome everyone. Welcome back to the live trading room with the Fivers. How's it going, Victor? How's your trading day been today?
I'm doing great. I'm excited to be with you guys again. Another day trading in front of our audience. I like it.
Yeah, very, very nice. I always looking forward to these sessions, not only because I get to share these awesome trading techniques that I'm going to show with you guys today, but also because I miss you guys. I'm seeing you in the comments. We got Louis, we got Daniel. I think Daniel, that's the is very, very active in our Discord. Louis is also very active in our Discord. Fernando as well. And guys, now that we have the new hub migration ongoing, you know, the interface is done. Now they're just working on some small things in background. Now it's very, very easy to find the Discord link to join our lovely, lovely Discord community. We had a lot of questions on where to find the link. Oh, we got Henry here as well. What's up, Henry? We got Max, a lot of people in here. Mark, I hope you guys are doing good. Anyways, we had a lot of questions in the comments recently. Where's the Discord link? Where's the Discord link? Well, now we don't have to tell you where the Discord link is. It's absolutely fantastic. Just log into the hub and you will find it. Yeah, our week is going well. Before we go into the RLZ thing here, I just want to mention something. I got this journal. It's a pen and paper journal. I have it next to me at all times. I write in it, every day, and I write about my trading mostly. It's a live journal. I'm supposed to be writing, everything that's going on, but it's mostly just trading. And as traders, like, we don't really have a life. We look at the numbers going up and down. That's our life. So mostly I write in the journal. And this morning I took a look in a journal and started reading a little bit about my trading. And I noticed that I recently, a couple of weeks ago, I started writing a lot about over trading. Taking a lot of trades, taking more trades than I'm supposed to be trading. Interestingly enough, that's also when I switched over to the new trade profit approach. So now I have to start making rules around my trading again, which I did many years ago. Now I don't really have any specific rules because they're ingrained into my daily routine. But I'm starting to deviate from that. So now I have to think about what I was supposed to be saying. But yes, I was supposed to be saying that I now have to put in new rules in place to combat over trading, and that will be one trade a day. That's going to be one trade a day. I've looked at the statistics. I've looked at performance. I should not be taking more than one trade a day when taking these swing trades. So I'm going to have to stick with that. Yes, I will miss out on some winners. Hopefully, I'm also going to miss out. Hopefully, I'm only going to miss out on some losers, but it's going to happen, But I need to get into the mindset and the framework, the mental framework of trading less. So now I'm going to start being very, very selective again with the number of trades I'm taking. And I have to be very disciplined in the approach of just one trade per day. Otherwise I'll fall back into the over trading trap, which is detrimental to my performance.
Yeah, I can relate to that. A lot of the times it's not more but less. Less is more.
Yes.
If you do the process well, right? And that's key. You got to do the process well. You got to have a good trading plan. You got to have data backing you up when you do the process well. That's what I mean, and that is what you're doing. And when you're at that level, you go for quality, not for quantity. And that's what you're doing. You're selecting just one a day, and it has to be the best you have at your disposal, and that's going to increase your performance. I'm sure of that.
Yes. Okay. Now, today I'm going to cover a subject that is very close to my heart. I think that's what you say. But I'm going to be talking about the RLZ, the reload zone. Now, the reload zone is a concept that it's very simple. It's not something advanced at all. In 2017 was the first time. I think in 2018 was the first time I started hearing about it, and I started seeing a trading mentor I had back then. So this concept was my mentor taught me this, and then his mentor got it from a guy trading on the I think the Chicago exchange, the what's that exchange called? I guess never mind, the board of exchange or something like that, right? In the 80s, I believe. So this is the concept that has been brought down to me through many different traders, which is I guess that's what trading concept is. You have one concept and it kind of get brought down through people. And now it's my turn to show you this. For me, this is very simple, right? A very simple tool that you can use in trading, but I think it's one of the most powerful tools in technical analysis, because I've tested this quite a lot. And you guys know that ever since I started trading, I've been looking at horizontal levels and price action. So I started with naked charts, just looking at price action and horizontal levels, just supply and demand, right? And I then started testing a lot of different things. I started testing many different indicators in combination with the break and retest approach. So the break and retest approach is very simple. Let's say you have an uptrend. That uptrend reaches a resistance point, and then you break above that resistance. And when you come back down to retest that breakout point, you're hoping for that resistance to not turn into support. And that's where you're buying in that trend. That's the break and retest in a trending environment. I've tested a lot of different things, a lot of different indicators and different Fibonacci levels to see what can I add on the retest to increase the probability of that retest being the actual bounce that continues the trend. And I found that one thing I probably tested like 20 different indicators that I can apply to this. And I found that one indicator is significantly improving the statistics of the bounce. And that is the Fibonacci tool with a specific area called the RLZ, or the reload zone. Now, when I'm showing this, I'm getting a lot of comments that this is from ICT, and this is what ICT does. And we had the OTE trader on yesterday, and I asked him about the OTE, the optimal trade entry, and he revealed to me that the fib levels that ICT is using is pretty much the same, okay? But instead of using the 0.618, ICT is using, I believe, the 0.612. So I actually believe that ICT has gotten his OTE idea from these levels, because to me, it makes no sense to be using 61.2. You should be using the actual Fibonacci numbers, and these are derived from the actual Fibonacci sequence. And if you just add a 2 here, you'll see that the difference is minimal. It's probably just to make it more unique. But these are the true levels that you should be looking at. These are based on the Fibonacci sequence. These are the levels that are within the Fibonacci sequence. Now, I don't think ICT copied me. I think ICT probably copied the guys that my mentors have copied from. So when ICT says, he's the mentor of your mentor, well, obviously ICT was not trading on the exchange floor back in the 80s. At least I don't believe he did. Maybe that's where I got this from. I don't know. It doesn't really matter. What I wanted to show you today is the fact that this works. And not only does it work very, very efficiently. It has a very, very good effect. So what I'm going to do first is I'm going to show you some examples across different time frames of the RLZ in action. First, and then when we look at that, I'm going to show you, when we see that it's actually effective, we're going to look at how can we actually trade it. We're going to look at specific setups. We're going to look at entry triggers, where to put TP, where to put stop loss, because it's one thing to say, oh, look at this level. That's a strong level. You see price reacting to that level. But it's another thing to say, this is how you're supposed to be trading it. This is your execution. That's something completely different. And that's the power of the things I'm going to show you today, because this is not just hindsight trading. Well, I guess it is, because we're going to look at examples, but you can apply this today in your own trading, and it applies on all different time frames. So first, I want to show you the fib settings. I think ICT. ICT, I think he started with his stuff in 2015, 2016, something like that, right? I think that's when he started publishing content.
I
Because
think
I
a
know
little bit
that
before that. I think a little bit before that, maybe 2010 or 11. I've heard he mentioned that those years. So probably a few years earlier at least,
I
but
know
not in
though
the
that
80s.
I know though that I've seen some stuff from Trader Dante. That Trader Dante has released a lot of stuff that ICT is talking about before ICT actually did it. But this is not a live stream about ICT. Because we're going to be starting a lot of different discussions in the comments, and we love him or hate him, his concepts works because his concept is based on technical analysis and the foundation of technical analysis, and there's only a few things you can do with technical analysis. In my opinion, when technical analysis becomes really advanced, that's probably when you're going to be looking at WD Gann, his sort of approach to technical analysis when he talks about time cycles and that sort of stuff. But looking at technical analysis, looking at price action, there's only really a few things you can do. It's quite simple, and what it all comes down to is levels. Okay, levels on a price chart, and you can call it whatever you want. But what I'm going to do today is I'm going to call it the RLZ. So we're opening up the fib retrace template here. You'll see that I have not checked the 0 and the 1. If I check the 0 and the 1, you'll see where the anchor points of my fibs are. But I'm going to be removing them to only focus on the RLZ. This is the template I have. I'll show you where the anchor point is for the fibs. But I'll remove the 0 and the 1. What I've added is the 0.618, the 0.786, and the 0.702. The 702 is an important level because that's right in the middle of the 0.618 and the 0.786. That's the mid zone of the reload zone, or the range EQ of the RLZ. So the first example is going to be USD CHF on the weekly. Now, when you place fibs, it's of course important to know how you are supposed to correctly place fibs to use the reload zone, because the reload zone is basically just the fib tool. When placing a fib, there's two options. So here you have a move on the weekly, and on this move, I would say that you have two different options of placing your Fibonacci tool, either from that low, so the very extreme, all the way up to that level. Okay, but what I'm looking at is I'm looking at this horizontal level right here. You can see that if you look at the weekly, you'll see that you broke an important level right here, strong weekly candle to the upside. And if you added perhaps a horizontal level right here as well, you'll see that there's a gap here, a zone. We can go to the line chart, we can expand it to the left, and you'll see that there's good reaction to this zone. You'll see, for example, here you have a range forming within between these two levels. What I'm going to do in this case, I'm just going to view this as one massive horizontal supply and demand area is the horizontal support and resistance area on the weekly. Going back to the candlestick chart right here, because I'm focused on this horizontal level, I am more interested in the breakout move. Okay, that's the breakout move that broke the level. Where did this breakout move start from? Where is the beginning of this breakout move? Well, obviously it's going to be that level right here. Let's go into the daily and I'll show you what I mean. On the daily, we see that the level has been acting as resistance, resistance, forming a range, breaking out. This is where the move originated from. This is the low that I want to fib to that high. And also you go out to the weekly again, you'll see that this whole move right here has a couple of bearish candles right here where the move kind of paused. You got one right here and then one right here. You could view this as one move, second move, third move. And I'm, for that reason, going to fib this low, from that low all the way up to the extreme. Now, what I'm saying is, when I say that the reload zone is so effective, more often, well, I'm not going to say more often than not, but when it aligns with a horizontal level, and especially in this case, a high time frame major level, the hit rate on this is very, very high. You can backtest this. You can go and look at this and say, when a high time frame horizontal level is confluent with a reload zone and it's the first retest, to have a reaction is very, very high. The probability of having a reaction is extremely high, probably up in the 80s or 90s%. But is it a 90% win rate? Of course not, because the reaction can be quite small. Okay, the reaction can be small, but there's going to be a reaction. And the reason why the RLZ is so powerful is that because statistically, if it's a horizontal level, if it's a good horizontal level, there's a good probability that you'll see a bounce. But if it's a horizontal level with the reload zone, the probability is higher. I know this because I've tested this for many years, and I've been using this approach for many years, ever since 2018. And it's the only tool that, when added to my trading strategy, I've never changed it a bit. I've never removed it. I've always had this, no matter what system, no matter what approach, no matter what market conditions. This is the tool that I'm always going to be using. So this is a very good example right here. You see price breaking out, coming down, retesting the reload zone right here, forming a weekly bullish engulfing candle. Very, very strong price action candle for continuation to the upside. And this is where we are currently trading. Let's look at another weekly example on USD CHF right here. We can look at this one, for example. You see that here's a pretty good example as well. You have and this is also where we're combining, market structure, horizontal levels, and that, the basic stuff. Obviously, to understand how you're supposed to be using the reload zone in your trading, you need to understand the basic foundation of price action and technical analysis, which basically is learn how to identify a trend. More importantly, understand the different types of market structure, which is trending markets and ranging markets, okay? Understand what a break of structure means and what that looks like, and also the importance of horizontal levels. And here you can clearly see that you have a daily trend, a high. Actually, we can start all the way from here. A high, low, lower high, lower low, lower high, lower low, lower high, lower low, higher high. A break of structure. Right here we have a break of structure. And now you have a powerful move right here. What happens if we fib this low to that high? Well, you see that the reload zone comes in very nicely here. And again, we can draw a sort of box. We can box in the whole reload zone, right? From the 0.786 to the 0.618. And look at that. You also have a quite decent horizontal level as well. And what happens when price hits that level? See what happens? We got a move down into the reload zone, nicely fills up the whole reload zone right here. And you see that it starts moving to the upside with a very, very strong weekly candle. So imagine if you would just have, on the higher time frames, put orders in every time you see a untested weekly level confluent with the reload zone. You could just put in blind limit orders. That's one thing you can do, and then just have your stops below the reload zone. And most of the time, you'll see that this is the optimal point of entry, and that's ICT terms, the OTE, the optimal trade entry. But this is really the area where you want to be entering if you're trading based on Fibonacci tool. So that's on the weekly. Let's look at Euro GBP. And this is just, I want to show you some examples of this, and then we can actually look at how to actually trade it. And before we go here, I want to see if I have any questions related to this. Do you start the fib from the wick or the body of the candle? It's a very good question, Henry. And there is okay, so we actually talked a little bit about this yesterday when we had a wick based on CPI or I think it was CPI or NFP. When you have a news-driven wick that's just completely out of ordinary price action, or when you have a wick that just completely destroys a trend, but then price comes back into that trend and continues. Sometimes I'll ignore the wick of that candle if the candle closes of that wick makes sense to price action. But most of the time, you want to incorporate the very extremes, the very low and the very high, because the Fibonacci retracement tool is based on percentage of retraces of a specific move. So if price trades to a certain level, that's where price have traded, and that's not part of the range that you're going to calculate the Fibonacci tool. Wherever price has traded, that's the range. But again, major news events can create wicks that are out of the ordinary price action, or like Victor said yesterday, it's an artifact. So in rare occasions, I'll ignore the wicks. And also, it depends on where it depends on where the Fibonacci level lands. If you see, for example, that when using the wick, the Fibonacci levels align with nothing, it makes no sense at all. Ignoring the wick, everything aligns perfectly, then that could be also a signal that this wick is not really part of the true range. But then again, you got to be careful with trying to fit the fibs to your bias, because sometimes you'll see like, oh, that's a good level, I want to short that. What if I use this wick or that candle? Oh, I'm going to use the one where the fib aligns perfectly. So I'd be very, very careful with that. But here is Euro GBP on the daily. Do you use retracement tool for continuation to find sell entries during pullback after? I'm not sure I understand the question, but am I looking for sells and longs? Yes, or maybe he's asking if I'm using the Fibonacci retracement tool extensions of the retracement tool. But if you're asking me if I'll also find sell entries with this, then yes, I'm exactly the same with sells as buys. And yeah. And am I? If you're asking about the Fibonacci extension tools, we're going to talk about that a bit later. You can definitely. I'm not using it, but you can definitely do so. Okay, Euro GBP. What's happening here? We broke a level here. Where did the breakout move start? Or the break? Well, let's call it breakdown. Breakdown move. It started here. That's the low. Put the fib from that high to that low. Where's the reload zone? The reload zone is right here. The EQ, or the mid zone of the reload zone, right here. Perfect hit of that one. Is it also confluent with a horizontal level? We can actually add just a horizontal level right here. And yeah, of course, not perfect, but very, very good retest right here. So, and also something we're going to talk about a little bit later. But what you see here is also a break and retest of a horizontal level, confluent with the reload zone. And what type of confirmation do you have here? I'm pretty sure that you had the answer to this. So let me know in the comments if you can know what type of confirmation this is. What type of candle do we call this? Okay, I'm not gonna tell you. I want you to write it in the comments, and then we'll go back to that. So during pullbacks rather than break and retest. No, I can't really comment on that, because most of the time I used to look at the break and retest. Now the thing is, like, most of the break and retest happens within the reload zone. If I would be looking for, I not really. I want it to be a break and retest. The lowest time frame that I'm using is the 1 minute. Okay, so all the way from the monthly. Well, I'm not trading the monthly, but you'll find the reload zone on even the monthly all the way down to the 1 minute. The best way of trading this is when you combine the high time frames and then you go into the lower time frames to confirm the trade, and then you'll find reload zone within reload zone, which is, reload zone inception. We'll talk about that in a bit as well. So here's Euro GBP, another one where you have a nice hit of a reload zone, and this is on the daily. Let's go to Euro GBP up here, another one on the daily. The same type of entry confirmation right here. Now, again, if you know why this is entry confirmation, let me know in the comments. But what you see right here is a beautiful trend to the upside. break of structure, retest the break of structure, hit the reload zone, and then down again with a very beautiful confirmation right here. Let's go to EuroCAD, and I'll show you another one on the 4-hour to just demonstrate how this can be used on many different time frames. So I think it was this one. Yeah, right here we have I would say a downtrend. You could view this as a downtrend. Either you look at this as one trend, like this, and the hit of the reload zone will then be a higher low, or you can view that as one trend. You have one trend here, and then you'll see this as an uptrend, right? And then, yeah, I think it makes more sense to look at that as the lower highs, lower low, and then a higher low. And what you'll see here as well is a very strong reaction to the reload zone right here. We're going to look at no, actually, we're not going to look at more examples. What we're going to do now is we're going to go back and we're going to see if we can, like, how are we actually going to be trading this? And now I want to talk about the actual entry confirmation. And let's see, do we have anything? Is it a magic candle? I don't know what the magic candle is. Is it a double top? No, it's not a double top, even though a double top can be a good confirmation. Not the double top in of itself, but the break and retest of the neckline of the double top will be confirmation. But what's the best confirmation? Is it a bear cross? It's not a bear cross. Is it a doji candle? It is not, but it is an engulfing candle. Okay, so this guy is 100% right. It's an engulfing candle, and I'm also looking at pin bars. Okay, so I'm going to be looking at that. Is this only for swing traders? Of course not, because like I said, you can find the reload zone on the monthly, the daily, the weekly, the 4-hour, the 1-hour, or even down to the 1-minute time frame. So it's not only for swing traders. But is it good for swing traders? Yes, it's absolutely fantastic for swing traders, because the reload zone on the higher time frames is very, very powerful. Doesn't come along very often, but very, very very profitable on the higher time frames. All right, so your reload zone is similar to Victor's order blocks. You look for multiple overlap and reload zone for high probability entries on low. Yeah, you could say. I mean, Victor is looking at order blocks, and then he likes to look at order blocks on different time frames. And it's not really the same thing, but I'll show you what I do on the multi-time frame approach, and you'll I think you'll understand the difference. Okay, this is how to answer a quick message there. All right, so now we're going to talk about engulfing and pin bars, okay? So when trading this based on the 4-hour as a swing trade, I like to look at high time frame levels where I want to see the reload zone being in confluent with high time frame levels. So we can go back to Euro GBP as an example. Here's Euro GBP, okay? Now, we have on this one right here, this is the daily. Okay, so this is a very nice, good looking daily level right here. We come up and we just briefly test the mid zone of the reload zone. I would not say that this is perfect. If you want to see something perfect, then this is what you're looking at. This is perfect right here, because it hits the horizontal level nicely and the reload zone. The horizontal level here is probably a little bit higher. It's probably here. So it barely is testing the low of the horizontal level. So not a A++ setup, but still a good example. Why do you want to see a bearish engulfing candle? A bearish engulfing candle in this case is a very good confirmation that price wants to move lower. So on the daily here, look at the next candle. That's a daily bearish engulfing candle. Now, what you can do here, and what I do most of the time, is when I get a bearish engulfing candle, and let's say I'm going to be trading this strategy on only the daily. I'm a swing trader. I'm only looking for daily candle closes as confirmation. I enter on that one, stops below the reload zone, or of course, if you feel like this is the top, the trade is already confirmed, we're all the way down here now, why not put your stop loss here? The risk to reward in a trade like this would probably be around 1, because I would like to probably take profits here, because I see that there's a level here If we go into the lower time frames, you're probably also going to see a level here. And obviously, we don't want to enter here because that's only 0.33. But what if we can look for a retrace on the lower time frames up here with a tighter stop loss? We can even take profit here for 0.76 R trades. So there's a lot of different ways to trade this, of course, because a lot of people have different ways of taking profits. So you'll have to adjust this to your own trading style. But the most important thing is the reload zone shows you the location of the most optimal entry of whatever trend you are trading. And I'm so focused on the reload zone that if we have a downtrend and the pullback in a downtrend reaches above the reload zone, I'm no longer interested in that downtrend. I will not be trading any trend that goes above the reload zone in a downtrend or below the reload zone in an uptrend, because to me, that invalidates the efficiency of that trend. So how can we get a better entry on this? We have confirmation on the daily. What if we go into the 4-hour? Can we find a pullback on the 4-hour? And what we're seeing here on the 4-hour is we're actually seeing a really good level right here. We're looking at that breakdown level. What if we can get an entry here? And this is most of the time the way I'm trading this. I'm looking at a trade to be maybe not confirmed on the daily, but I want to see a strong reaction on the daily. And here you have the daily candle closing down here. You also have a strong bearish candle on the 4-hour. What if I look for a retrace up here? Stop loss can probably be in this area. And then if you're looking for just a small move, 1 R down here or down here, you have a 2.6 R, quite big. What happens here? We're not really coming up to test that level, but you'll see that we came close, right? But a lot of times you'll retest that level. But let's say, I can enter on that one right there. So let's say you get filled here, even down to that is going to be a 2R. So maybe not the best example, but the structure is the same. So here you have sort of a double top formation and then a break, and I'll look to enter on the retest right here. And what's important with this example, and you'll see this a lot of times, the neckline of the double top or M structure in a downtrend will be confluent with the 0.618. So the way this looks like on the daily is you have confirmation inside the reload zone, and you're then looking to enter on the retest of the area around the 0.618. It's quite simple. So a rule of thumb here is confirmation of the trade happens outside the reload zone. The entry happens on the retest of the reload zone. Price is supposed to, I can show you a great example here. This is perfect, right? Let me show you. Okay, we have a good level here. Let's add that level. Let's just create something here. I'm not really spending too much time on the level, but I think that's actually a really good one. So price comes up, is testing that level right there. We now have confirmation that the reload zone has been tested. Price is now in the area where I would want to look for an entry. So normally what I do is I have an order, here, and now my alert has, I have an alert here, and now my alert has gone off. I'm now interested to trade this. And I want to wait for the daily because I'm looking at this and I'm saying, there's a wick, but the candle is still bullish. We could just continue higher. There's not a huge information on this daily time frame that tells me the price wants to go lower. What happens on the next candle? Now we have something else, right? Now we have something completely different. Now price is telling me that I've used this level as resistance. Now the probability of moving lower is much, much higher than before. What do we want to do? We want to put our orders on the retest of the 0.618. Remember, we hit the reload zone, confirmation happens outside the reload zone, entry happens on the retest of the reload zone. Stop loss above the reload zone, TP, let's just put it down here at these lows, right? Put a level here, we're gonna TP here, 1.46 R trade. What happens on the next candle? That's the fill. We got filled right there. Look at that wick, testing that reload zone right there. And then it moves down to TP. Now, what's even more interesting about this, and I haven't really checked this, but I'm pretty sure that retest is probably close to the reload zone of this candle. And now we start talking about reload zones within reload zones, okay? When you have confirmation of a trade getting rejected at a reload zone, to find the best possible entry for the retrace, look at the reload zone of the confirmation of the move that confirmed the trade. Put from that low, from that high to that low, you'll see right here, you'll see that you have the reload zone right here. Because a lot of times you'll see that price is not stopping at that 0.618. You'll see it come into that reload zone, and that's going to be a way better entry. Doesn't happen a lot, but when it does happen, you'll have high risk to reward trades. And a lot of times you'll see that the low time frame reload zone is confluent with that high time frame reload zone like this, and that increases the probability of a bounce significantly. When you have different reload zones across different time frames pointing in the same direction, that increases the chance. I think that's what that viewer talked about with your order blocks as well, Victor. You have kind of combining areas of different order block timeframes. Let's see. So that's the bullish engulfing candle. That's how we want to use the bullish engulfing candle as a confirmation of a trade. We can also go even deeper into the lower time frames, and in this case, we're going to go into the 4 hour. So we now have confirmation on the daily. We go into the 4 hour, and what do we see on the 4 hour right here? Well, actually, not a lot. This is quite messy. I would actually just put the orders here as per the daily time frame. So we can go to. We can look at that euro. Let's look at euro CAD. We had an example on euro CAD because I want to talk a little bit about the engulfing candle, but also break of structures and double bottoms inside the reload zone. Alex is not here today. He's quite busy in the background working on the lots of stuff with the hub migration. Could Victor improve his strategy with the RLZ? Yes. Yeah. He will. I'm gonna go as far to say yes. If he adds this, yes, he'll probably do. But the thing is, most of the good order blocks is also within a reload zone. So that's what I'm saying. Like a lot of different price action techniques, they kind of align with each other. And the reload zone and the order block is actually two things that are quite good together. But also, I feel like a lot of times the best type of trading are done when you just select one approach and then consistently stick with that.
Yes, I agree.
Good. All right, let's continue here. Let's okay, so we're in this reload zone, right? So double bottoms, we get double bottoms inside the reload zone. Let's see if we get this on the 1 hour. So first of all, we can look here on the 4 hour. We have a really good candle right there. Okay, so first on the 4 hour, this would actually confirm. I don't really have the statistics on my average R on those timeframes, so I can't really help you with that. I know though that when tested, like the idea here is that price action is fractal, and the way that price action reacts to horizontal levels on the weekly, daily, the 4 hour, and all time frames. If you add the reload zone, you'll see that it's the same thing with the reload zone as well as with order blocks as well. So the idea that price action is fractal doesn't only apply to the Fibonacci tool; it applies to almost every technical tool out there. How do you use the Fib tool on TradingView? Well, it's the same. There's a Fib tool. The TradingView has the Fibonacci retracement tool, and it's exactly the same thing. I just go into settings, I select the same numbers, and then I just add it from the low to the high. I usually don't do my TA in MetaTrader because it just takes too long. But it's basically the same approach. So here on EuroCAD, again, we hit the reload zone right here. We have now confirmed the trade with that 4 hour breaking out. what happens if we put an entry order on the retest of the 0.618, and then we're going to be exiting on, let's go down to the 1 hour to see if we can find an exit point. We're probably going to be exiting on like that wick right there to front run that resistance. The R of this trade is 1.54. Not asking for a lot here, and we have a fairly wide stop loss. What happens on the next candle? I think most of you understand what's going to happen now. You'll see a retest of the 0.618, and there you have it, retest of the 0.618, and then you'll see that move to the upside. And if you go into the 1 hour, this is where you have that double bottom. Now I'm pretty sure that this could have been news driven. It kind of looks like you had some type of news event here, or maybe that's just because it was. No, I think this was news driven. But what I like to see inside the reload zone is something like this, and then you look for a break and retest of the neckline of the W, which is also a complement with the 0.618. But most of the time, what I've seen is like a really good approach, and this is actually the way I'm trading this, is I'm just looking to put orders on the retest of the 0.618. So my main time frame is the 4 hour. I look for daily levels. And I also try to look for levels that look good on the daily and make sense on the weekly. And then when those levels are hit, I make sure that price is within the reload zone, and then price confirms a bounce by trading outside of the reload zone. And if I can get a retest on the 0.618, that's when I get the best entries, and I don't really look for a big move before hitting that. And look at that wick, like it hit that TP and then started moving lower. Now, if you want to extend your TP, okay, there's a extension reload zone as well. Okay, so you have, if you go into the Fib tool, you can look at adding the same numbers, but you just put a minus in front of them, and that's going to bring the extension reload zone up here. Now, usually what I'll see is when you have confidence like this example, you put your TP to front run the 0.618. Well, look at where that 0.618 is. It comes in perfect confluent with this whole resistance area right here. And what happened? I don't know what's going to happen here because I haven't, put too much effort into. I don't really like preparing it too much because I don't really like looking at examples and doing hindsight trading. I do like to use the replay tool though, but it's better if I don't really know what price action is going to do, because that's then more like real trading. But let's see here. Well, it's going to hit it. Look at that, straight up into the extension reload zone right here. Now, this is a massive trade, This is a 6.7 hour trade as a swing trade. Okay. Now, of course, these doesn't come along very often. And I'd say if you're trading like this, you're looking to use the reload zone like this, you're probably gonna have a win rate between 30 and 40%. Depending on your trading psychology. If you're very, very disciplined, you can probably get as high as 40% with this approach, because you're still trading through high time frame levels to high time frame levels, because this on the 4 hour is a trend. But if you go to the daily, it's going to be level to level inside a range on the daily. But most likely that's going to be the top, right? Yeah, and then price is going to move. It kind of starts ranging here, whatever. But this is a great way of using the reload zone as an entry, and then the extension reload zone if you want those really high risk to reward setups. And then of course you can use other Fib tools. I'll show you the one I have here. Which ones am I using? I think that's, so this is one of my main templates, right, where I have different Fibs on, where I have, and not only do I have the extension reload zone, I have the minus 0.236 and 0.382 as possible take profit areas. And if you're going to be trading like this, one thing you can do is you can actually use the 50% Fib as added confirmation. Okay, why is that important? Because when price has bounced inside the reload zone and confirmed the 50%, it gives you a much higher confirmation, and the probability of price continuing higher is actually much higher. So in this case, but you'll get a much lower risk to reward. But in this case right here, you have that 4-hour candle. The 4-hour candle is opening inside the reload zone and closing above the 50%. So what you want to do is you want to put your orders right on the 50%. Again, we're looking for confirmation and then a retest of the 50%, just like we looked at the 0.618, but this time the 50%. Stop loss below the reload zone, TP at the FTA. This is still a 1.22 hour trade, lower risk to reward, but the win rate is going to be much, much higher because you have now reclaimed the 50% point of this local downtrend, which usually also means a break of structure. So if we go into the lower time frames, you'll see that you have a structure here with a high, low, lower high, lower low, lower high, equal lows, higher high, higher low. That's a break of structure right there. And the real confirmed break of structure is the reclaim and the retest of the 0.5 fib right here. Now, I promise you guys, now I can't say promise, but the stuff that I'm showing you guys here today is some of the most simplest approach to technical analysis and trading there is. You're only looking at horizontal levels. You're applying the absolute most fundamental approach to TA there is, which is the break of structure, applying the Fibonacci to this. It's so simple. Anyone can do it. And I'm not kidding. Like you see on social media, people say like, it's so simple. But this is really very, very simple, because what you're doing is you're taking the very essence of technical analysis and you're just following whatever price is telling you. And you're using the Fibonacci tool to find the most optimal entry and also the best type of confirmation. Now, the way I'm trading this is I'm not looking for the big moves. I'm not looking for the moves where you just shoot straight up and hit that 10R. I'm looking for the small moves. I'm looking for a high win rate and low risk to reward. Now, remember in the beginning, I told you that I believe that the probability of having some type of reaction inside the reload zone is very, very high, probably closer to 90%. But you'll need to make some money on that move. And sometimes the reaction is just too small to trade. And that's when you're not going to have a trade or you're going to have a loser. But through my testing, I've seen that when price hits a horizontal level, confluent with the reload zone, you'll have a win rate of as high as 75% of reaching 0.5R. Now, of course, having a reaction might be 90%, but to actually reach half an hour would be around 75% if you have that stop loss below the reload zone. And the way that will look is, again, we can add the original template here, the reload zone, which is, where is it? Here. And then you have that initial 4-hour bullish engulfing candle. We put entry on the 0.618, stop loss below the reload zone, and now I'm looking for at least 0.5R. Look at that move. That's nothing. It's only to the very top of the previous 4-hour candle. So imagine that you're taking a trade like this, and what's the probability of seeing a move to this level and then compare it to the probability of seeing a move to this level? I think you all watching this can agree that the probability of seeing such a small move is very, very high. And when you have a bounce on a high time frame level confluent to reload zone, it's even higher. And that is why I'm using reload zone, because it really increases the whole it increases the win rate or the probability of a bounce quite significantly. All right, let's see if I covered everything that I wanted to cover today. I think there's only one thing left, really. So I've covered I have a list of things here that I wanted to cover. So what I did is I've covered the different short examples. We looked at engulfing candles. Another thing is the pin bar candle. So one very strong confirmation is the bullish engulfing candle, but you also have the pin bars. And in my opinion, the pin bars is as good as the engulfing candles. This in my case would be a very good looking pin bar where the wick fills up the whole reload zone and the candle is closing above the reload zone. This is the confirmation. Again, look at that. Even on the weekly, I mean, guys, even on the weekly, you have confirmation outside the reload zone. Put entry orders on the 0.618. I mean, come on, this is just this is too good, you know. And that would even have been a winner up to that level. 1.2 hour trade on the weekly. Okay, it's just imagine just taking a couple trades like this a week, or one trade a week, or just a couple of trades a month. Like there's the possibilities here are just endless. So pin bar and engulfing candles like confirmation, really good. Now, before I go into the questions, I want to talk about the difference between limit orders and market orders, and also the difference between blind orders and confirmation. What do I mean by blind orders? Okay, let me show you. This is where we're trading. I'm putting in an order here, stops below the reload zone, and my TP here. This is a blind order because I have no idea if price is going to come down here, and if price comes down here, I have no idea if it's going to get confirmed or not. So that's my blind order. Price comes down, hits the order, and then continues higher. With blind orders, you'll be able to get a very good entry, but lower win rate. With confirmation, you want to first wait for confirmation. You want price to hit the reload zone, confirm that it's support, and then enter on the retest of the 0.618. This means that you're entering after confirmation. Should you be using blind orders or wait for confirmation? I'd say always wait for confirmation, because the win rate is going to be higher, and psychologically it's going to help you quite a lot. If you can be disciplined enough to actually wait for, let's say, a 4-hour candle to close, we can go back to, well, actually, let's look at this one. So what if you're trading, let's say this is on the 4-hour, okay? And this 4-hour candle is going to close in 2 hours, okay? You're seeing this and you're like, oh, look at that. That's the perfect setup. That is the perfect setup. I'm going to place trades right now. And then it turns out to bearish. It turns into a bearish candle and you stopped out. Waiting for confirmation increases the likelihood of this being a profitable trade. And also, waiting for confirmation teaches you to wait for the candle to close, which will automatically teach you to be more patient. And if you're waiting for a candle to close, if you're waiting 2 hours for that candle to close and confirm your trade, you're automatically becoming more disciplined, okay? And discipline and patience are probably two of the most important ingredients in if you want to become a successful trader. So waiting for confirmation is very, very powerful for many different reasons, not only for this system and strategy, but for your trading psychology as well. Wow, there's a lot of talking. I gotta get some water, and then we'll go through the questions. All right, Victor, you have permission to speak now.
Yeah, a lot of people had very good reactions on what you just explained, and I think you did a great job at explaining it clearly with very simple examples and how powerful it can be. I look at it. Of course, I don't use that specific Fibonacci zone which you use, but I use, as you know, retracement. I use the fib too, so I know how it helps you to increase your win rate, to be more selective, and to identify the areas that is likely. And that's what we need to do as traders, right? Identify where the opportunity lies, where the possible reversal will come in, and you have done a great job in explaining that. Yeah, we have a couple of questions. Let's see.
I'm gonna pull up this as well, because we have Powell speaking in 5 minutes. Not speaking, but he got testimony, probably Congress testimony or something like that. But so get a major news event coming up. So guys, make sure that you're not You're not if you're on the high stakes account, you can't be trading 2 minutes before, 2 minutes after the news event, and please don't trade based on these at all. Like take a break, just take a break. There's no money to be made here with trading these news events. There's only stop loss to be hit and slippage and spreads and all that terrible stuff. So don't trade. Just don't take a break. The market will be back tomorrow. Okay, let's see.
All right. So one of the question is the engulfing candle as your confirmation. So that is what you're waiting for, right? That's one of the confirmations indication, right? Engulfing and or um, pin bar. Is that correct?
Yes, yeah, exactly. And like 70% of the time, it's going to be an engulfing candle. Like the engulfing candles are just so much more. They're just so much more frequent than the pin bars. At least from the way I look at it. But the question is also like confirmation that a lower high has been formed, and it's not really about that. You know, it's not really about the engulfing candle confirming the lower high. The engulfing candle is just confirming the setup. You know.
Yeah.
So the lower high is usually already you know, obvious when the engulfing candle comes in.
All right. And there's one person here asking about the those moments when you don't consider the wick, right? You said when you think it's an artifact with NFP, for example. Those moments, do you also use the other side of the candle body as the the range of the fib, or is it just for one side of the fib range where you disregard the wick, right? Do you also use at that time? Do you only use body to body, or is it?
You know what? I think what we need to do is we'll take a look at NFP. We'll take a look
Okay.
at the last NFP, and then I'll show you what I mean. Okay, so when did we have NFP? It was
Friday around 2:30, I think.
What date was that though? Was that the 5th? Okay, the 5th.
That was in.
Yeah, okay, not from payload, the 5th of July. 5th of July. Yeah, okay, so this is actually a good example right here. We can look at the Bitcoin right here. So let's look at the 4-hour. Actually, no, it's not a good example. Let's look at something else. GBP USD probably.
EU has a great
okay.
EU has a great candle.
Okay. Yeah, that one right there. Yeah, okay.
There we go.
So actually I think this one is into the 1 hour. Yeah, okay. Yeah, so here now this might not be the best example, but what if I'm going to be fibbing, if I'm going to put a fib on this, okay? This is the move that I'm going to be putting a fib on from that low to that high, okay? And this one in the middle right here, that's the NFP move right here. And to me,
yes,
it doesn't make a lot of sense, you know. So because if you look at the trend, you have low, high, low, high, low, high. Let's say, you know, high here, low, and let's just say that this is one move, right? But I'm not gonna put it like, you know, I'm not gonna do this. That's not the move, okay? You know, that's not the move. So what I'll do in this case is I'll probably put the fib from that low to this high, is ignoring that price action, that wick right there. Again, so not the best example, but a good enough.
So you ignore both sides of that candle that is considered an artifact. In this case, right? Because you would say that, you know, both wicks are not actually a real representation of how the price action has been a long time. It's just one time where a huge volatility came in and created those wicks, but that's not a representation of the candle, you know, the range that has been trading the last couple of days. Yeah,
exactly. But yeah, exactly. But I think there's definitely a form of you know, discretion involved here. you have to kind of look at like, does it make sense? Now, because what if the wick hits this level? What if that wick stops here? Then that would be within the range. So maybe, you know, that would make sense. But yeah, I use common sense. And what I mean common sense is if you know what a good trend looks like, only trade what you understand. So if there's an NFP event and there's a candle just all over the place, and you're not really sure where to put the fib, well, don't put a fib on it. Don't trade it. If you're not really sure where the levels are, look for a pair where you actually are sure where the levels are.
Indeed. It has to make sense with the rest of the price action. That's what I understand, right? If it's too deviant, if it deviates too much from the rest, then it's probably an artifact. Or you should at least not consider it as representative as the rest of the PA. Right?
Exactly.
If it does fit in, then it's okay.
I think we can actually. I do have. Let's take a look at a couple of charts here that I have that I'm looking to potentially trade today. Actually, I'm not probably not gonna be trading today because I can't really see much. But we had a couple of trades yesterday, and NCD CAD here hit my TP, and if I add. Did this have to do with reload zone? And I'm going to be honest with you guys, with a lot of trades that I'm taking today is I'm not applying the reload zone too. I probably should. That's the thing. I probably should. My win rate and I probably should. And the reason why I did this presentation today is because I also got a new interest of doing a new back testing with looking at the efficiency of the reload zone. And I started doing that yesterday evening, and I was just blown away of its, how effective it was with the way I'm trading. So what I did was I went through all my trades and I looked at basically what's the confidence with the reload zone, and then what's the result of just the trade that is confident with the reload zone. And obviously the results were very, very good. So this one right here is not really confluent with the reload zone, because I believe that the move, the true move on the daily is from all the way up here to all the way down here, but we can look at the move that broke the level, and we could view that as that one to this, and at that point it kind of aligns. At least it hits the 0.618. And if you go to the 4 hour, yeah, I would actually say that it looks like if you're taking into consideration the daily, you got one move here and then the rest, because you have a trend, break of structure, and then a new trend. So it kind of agrees. So this trade was actually in conflict with the reload zone. I didn't think it was because it looked like it wasn't, but this is actually in conflict with the reload zone. And then on AUD and CD, beautiful example. This is a trade from yesterday. First, we can look at the weekly. Weekly comes down, hits the 0.618 here. That's the reload zone, right? And then if we add just the reload zone like that, comes down, hits the 0.618 and bounces from that level. We'll look at the daily. Actually, I think that was on the 4 hour. I liked, this reaction right here. If we add a fib from this low to that high, you see that price comes down into the reload zone right here, has a bullish reaction right here, and you also have a break and retest of the 0.618 right here. And I really wanted to take this trade, but I was way too late. So I looked at it on that candle right there. Now look at what happened here. I went into the lower time frames. I believe I went into the lower time frames. We had a structure that looked like a rounded bottom after bouncing inside the reload zone. I saw that we had resistance here. 1 hour candle closed above that resistance. Going to the 15-minute, we have a trend. And what happened here is I added the reload zone from that low to that high right there, which brings in the reload zone right there. Now, I don't think the reaction was quite the reaction I looked for, but it's just to show you like my thought process and how I applied it. Now, the reaction obviously not exactly what I looked for, but you had a reaction at least on that level. But I think the most obvious level and reaction was this reload zone right here. Yeah, there's a lot of examples out there how I'm applying the fib. But what's more interesting of this move is this trade is the move that happened after I closed it. Look at this; it just shoots straight up. But this trade right here could have been like a 2-3R. But what you're seeing here is actually, you know, the trend behavior. You start here, resistance, break above a high time frame level, and then you start to form this higher high and higher low pattern. So what we can do now is we can, on the 4 hour, the next level, I'm going to move to this one. So we're going to move to ADNCD. This is the same chart, right? And I'll remove everything. Get a clean one right here. Now, obviously, the first trade was based on that fib. Now what we can do is, because we have a new move, we can use from that low to this high, and that's going to be the new fib. So the next trade is going to be this right here on that bounce. That's my next trade. And usually you see that this bounce right here also probably on the 0.618. Yeah, so that's on the 0.618. So a lot of the good lows, the good bounces in a trend is usually going to be inside the reload zone. And then when the reload zone is broken, when price goes below the reload zone, that's going to be a sign of weakness. And that's why I never buy an uptrend if price is below the reload zone, if that makes sense.
Gold making some nice movement right now.
Let's see.
It just reacted of an order block that I've been watching.
See, are we getting not really a huge reaction to the speech, but there's definitely something going on here. Victor, do you want to take a break before we continue? Yeah, I think we probably want to take a.
Let's do a break.
Let's take a 10-minute break, and we'll be back, and we'll do some live trading.
All right, I will set the break. See you guys in 10 minutes. we're back with you guys.
Okay, let's see. What do we have here today? Dun, 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 dun. Oh, news is later. Okay, sorry about that. We got no. Fed. Okay, yeah. So we got Fed chair testimony at in
In about
40 minutes. Yeah.
40
Okay.
minutes.
Yeah.
Yeah, 40
I
minutes.
thought
It's
that
later
was.
than that we mentioned. It's
Yeah.
it's 4, not 3, at least our local time. All right. So on gold, would you like me to go over gold? What I'm seeing, all the structures that I see, and the PA?
Yeah. Please do that.
Okay. Okay. So if I will show my screen, of course, that is not what there's nothing to see there with those wicks. On the monthly, there is really not a lot of information. What we do see is, of course, on this time frame, the buyers are in control. Market structure is clearly very bullish. We are at the top or at the end. Well, we don't know at the end, but currently at the end of a very bullish move, an impulsive move, and there's no information in terms of structure or candlestick combination. This is on the monthly, right? So, but it's very bullish, no doubt about that. The weekly, what do we see? We have a accumulation. That's what we had a couple of we mentioned this. We have accumulation or a number of structures, bearish structures that were formed, and that made me think initially that the sellers were coming in. That's one structure. That's another structure, and we had a third one, which was the outside bar, which indicates that is how the market reverses, right? It starts forming those bearish structures and then goes to retest them. And if it retests them successfully, it will go the other way, right? So in that sense, we were.
So sorry. If I got a question there. You said you form a bearish structure, and then it's coming to retest that. And I think what's interesting here is if you put the fib on from the
Okay.
wick. If you put the fib on
Let's see
on
this
the
one.
very high, yeah,
Yep.
you're going to see that if you put on the that's gonna be the reload zone, I believe. So yeah.
All right. So we're currently in the reload zone. I'm going to take off that 50% because that's the one I use, and that may not help us right now. So this is the area.
Yeah. I think this is what I'm saying, right? You have an order block, or you look at that what you call like the bearish structure, and you look for the retest. A lot of times that's going to be comped with the reload zone. And you see right here, the reload zone is right in the middle of that weekly OB.
Yes. Yes, and I think go ahead.
No, go ahead. Go ahead.
I think that viewer had a very valid point. It probably I haven't done that, to be honest. I haven't checked what my equity curve looks like if I only take order blocks within your reload zone, right? Within that, because the area that I use to look for my entry order blocks are from 50 all the way to the last point. So I would be taking from 50, which was around here, and I'll be taking this whole area. This is not an order block, but this whole area, I would be looking for let me put on the fib, and that relates, right? The whole 50%, that's the area that's my fishing area. That's where I'm interested in. So I'm going to be looking. I'm going to be looking to the left, of course, not here, but I'm going to be looking to the left. This is the area that I want to be catching the reversal, right? And as you can see, of course, your reload zone is part of that. It's actually being more selective than which is much more broader. So I haven't done that any testing on it, but what would be interesting to see is how my equity curve, if I were only to take entries within the reload zone, right? Because that's what you have found out, that's what helps you catch those reversals. So But coming back to that, let's see. I will leave the reload zone so we can use that. And on the fib, I will leave it. But what I was going to is that we have a bearish structure, right? It's not the last one, but it is a bearish structure where we formed. After we formed that one, this is the first structure we formed. This is the second one, and that's the third one. That's the outside bar. And I find it quite remarkable that after we form two bearish structures and an outside bar, that the market doesn't have follow through.
Yeah.
It failed to have follow through. That doesn't fit.
And that
Something is
and that out and that outside bar is very, very big.
Yes, it's very significant. I mean, you can't miss it.
Yeah.
If you miss it, it's because you're not accustomed to the outside bars yet. But if you
Yeah.
know what an outside bar is, it's very obvious in our face. So if you see this, the most likely reaction or expectation that we should have as technical traders is that price will likely come back to retest this order block that was formed by the outside bar. I'll put it in, right? This is to me, this is the action. This is the storyline of price action lately, right? It formed this outside bar, the order block formed by the outside bar, and of course we can see to the left what structure it used to reverse from, right? Bullish structure. It had 3 bearish structure and 1 bullish, right? It tells you who is most likely to be winning. But even so, the bulls were in that sense the underdog. Even so, it reacted and closed and formed another one. So the storyline changed abruptly in my reading. So my question is then, is this perhaps an indication that the bulls are much stronger than they're showing on the charts, right? Because having these structures, you would expect that the price would, after form this outside bar, maybe come back to retest it and then shoots down. That's what happens usually when price forms those outside bar. But instead of doing that, it formed an outside bar, which is this order block, right? I'm sorry, an engulfing, which is this order block, comes back to retest it, and instead of having follow through to the downside, reacted with this impulsive move, not only with an impulsive move, but invalidating that outside bar, right? So that's very strong.
Yeah, one question on that. So yeah, we're because of the bearish structures here forming, we're potentially looking for a rejection, at these levels, and we're seeing that on the weekly right now. But if we look at the I mean, I'm looking for longs. I'm
I am
thinking
too.
that gold. Oh yeah, you okay. So you're getting there.
I am. Yeah. The thing is, we were forming these bearish structures, and that made me think initially, right? Let me get the correct tool. This is the first, that's the second, and that's the third, and that made me conclude that the sellers were going to be in control, or were already in control. But the fact that the market shifted completely by forming an engulfing after that outside bar, and not only that, that's one thing. That's the first sign. The second sign was it came back, retested that newly formed bullish form order block, and shut up all the way with a very big candle and closing above this outside bar. Outside bar, this order block. What does that tell me? It tells me that the buyers came in so strong that they negated an outside bar, which is a very significant, extra significant move. To me, that is very, very bullish. You can't do this unless there's a lot of buying pressure coming in to the market. You don't invalidate an outside bar like this. If you do that, it means that it's a complete shift. And that means also everyone who was short from this candlestick combination is now either they are stopped out or they are trapped, right? If they are swinger, they're trapped. If they took these signals as short signals, they're now trapped, and that is something that could fuel us going forward much higher. And that's why I have this order block, which is gone away. So we now have a shift. Before we had 3 bearish structure and 1 bullish, telling me that it was likely to go down. And what we have now, we invalidated one, and we have 2 bullish ones. So it's more even. It's not bearish anymore. And because it invalidated just last Friday at the end of the day, to me, it's bullish. We're on the buy. The buyers are in the driving seat right now. So what makes sense to me is to find somewhere. You could argue that this order block on the weekly could still be retested and function, since the candles haven't left them and made that space in between, right? This is the immediate reaction. But you could also go to some other time frame, let's say the daily, and you will see that there are other order blocks. And in this case, let me see, I have the way I trade. This is one possible structure it may come back to before it continues higher, right? There are more than one, and when we have more than ones, because we have overlap of that daily as well, I like to have it, both of them. So that doesn't really help us because it's quite wide, but it just tells me that we have multiple structures that are overlapping, each one of them able to push price. If it comes down, maybe sometimes it doesn't come that low, it doesn't retrace the whole candle before it continues. But if it does, that's where I want to be a buyer. That's on the daily time frame. And on the 4-hour, we do have another outside bar, right? This is on the 4-hour, so it's not as powerful as the weekly, but it is, however, still an outside bar, which is this, which was created by the NFP candle, or before that. Let me see. Yeah, it is. It was created at the end of before NFP, and so this is an area I would be expecting price, probably, if it does something like a retracement, a reversal pattern, that I would be interested in taking a long from this area. Of course, going to the lower time frames and catching that reversal, but we haven't seen that yet on the 4-hour. We don't see that and this is something, right? I identify this as a possible area where price can come back to and could serve as a demand area. But what has price action shown us so far? It hasn't closed, right? And the keyword is close. It hasn't closed as an bullish engulfing yet. So far, it's only forming bearish structure. That doesn't fit yet. So the price action, current price action, is not aligned yet for a move to the upside. So the price action will help you time when you're able to go long from this area, if you're going to go long. So far, it has only formed bearish structures, and now it is showing a bullish one, but we still have 3 hours and 28 minutes for that bar to close, and a lot can happen in 3 hours and a half. And we'll have to see. If it closes like this, then I will switch bias right now, and I will be buying from this area. That would be my area to be buying on the lower time frame, so of course. But that's not the case yet. So if I were to trade today, I would short this, right? I know on the bigger structure, this is where it's likely to reverse, but it hasn't done that yet, and I'm not going to pre-run any move. I would like to see price action be my confirmation. So if we go to lower time frames, I can find other order blocks, and that's why I have an area with yellow horizontal lines where I expect price to come back and retrace. And if I go to the lower time frames, we can also see that there's a great area here on the 5 and on the 3 minutes, that if it is going to go down, right? If that is going to happen, there is a good likelihood that it's going to come from this area. We will have to see if it invalidates these order blocks, and if it does, then that could be a sign that that setup is not going to come to fruition, and maybe it is getting ready for that other scenario, the other side, the scenario where we're going to be using this as demand to start going higher from here, right? So we have 2 opposing setups at the same time, right? On the lower time frames, maybe going short, and on the higher time frame, we are in a bigger area where we could be going we could be reversing from the demand area. And if you look at if you take off everything, it doesn't really look very bullish from this point of view, right? We're coming from this impulsive move, right? And anything that it does within here could be just consolidation as it continues, right? I'm not talking about the order block, but I'm just looking at market structure from where it's coming, which is from above. So I think perhaps after the testimony, we could have some idea, and for sure at the end of the H4 candle, we can have some conclusion, some clarity. If it rejected those area, it may reject those area, it may not. There's nothing for me to know that in advance. That's just an indication where the probability lies for a possible reversal. And if it does move this, then it's not. The thing is, I have on the bigger time frame, I have an expectation that it might turn around from these level, from the H4, right? But until it actually shows us bearish structures forming, I have no business going long there. I need to go with where the current price action is telling me, and that is so far is still bearish, right? We're making lower lows, and it's not breaking any highs yet. If it breaks this, then things shift again. But we should not get ahead of ourselves. So far, it is in a great area for a short until it proves us otherwise. That's my take on gold. So to recap, I expect, given the move, given the fact that it invalidated that outside bar, I think that should be the takeaway here. Given the fact that it invalidated that outside bar, we should have the buyer should have an easier time going up in the coming sessions, whether that's today, whether that's in a couple of days, I don't know. There's no way to know that. And where exactly it's going to bounce off, we'll have to go to the lower time frames. But that's my bias. My bias is we have shifted back to expect easier time for the buyers to push price higher from current prices we have.
Yeah, I'm just
where are you looking for a long? If you're
well, I'm just gonna stay out of gold. I think
okay.
I'll show you, but I feel like, so what I'm doing here is I'm looking at this level. So first of all, we have to go all the way out to the daily.
Before you
looking
continue,
at this.
before you continue, we were saying that the common theme is that we use different tools, different indicator or tools to mark where we're interested, and but a lot of the times they come up with the same conclusion. And I just did that. Look at that. This is my entry order block on the daily, and look at that reload zone.
Yeah,
this
exactly.
blue zone, that's the entry where I'm starting to get interested on the daily time frame. And look at that entry order. Your reload zone is right in that area.
Yeah, it's quite incredible how two very different approaches can have a similar result. But it also just goes to show that we're looking at the same thing through different lenses. We're looking at price action. Oh yeah, looking at gold here, we have nice. Thanks, Josh. Really do appreciate that comment. Okay, so this is the range, and so I'm seeing strength here. I'm seeing local strength. I'm seeing not a fake out. I'm seeing a possible reclaim here of the range EQ. But first of all, I'm quite frustrated in gold because I got stopped out, but that's my bad. That's my bad because I put the stop loss right where I shouldn't have put it, and I entered too early. But first of all, I'm watching that level. We got the range EQ area right here. I'm actually going to put it like that. If I go into the 4-hour, go into 4-hour here. I put my fib on because this is NFP. It's also a good example. I put anchor low fib here, high here. That's the reload zone right here inside that range EQ area. And what I'm seeing right now in 4-hour is a possible double bottom here inside the reload zone. If this 4-hour candle can close here, then we have a trade based on what I've just showed you guys. And the trade I'm going to take is probably something like this. It's incredible, but I can probably just take a trade like that. That's going to be my trade. But then again, I'm not going to take the trade because I just feel confused over what gold is doing right now, and a bit frustrated over its price action. And there's just so much conflicting levels here. Yeah. Well, you know what, Gerald? Gerald's game, maybe not Gerald, but I don't stop you from going to the gym, but maybe go to the gym in 20 minutes. Yeah.
That's a good comment.
I'm in consolidation with XAY is gold. Yeah. I don't know, man. I don't like what I'm seeing.
Well, on the higher time
like...
frames, we are. On the higher time frames, we are. We definitely are. If you look at the weekly.
Yeah, I mean, this is bullish. I'd say that's quite bullish. Everything about this is bullish. I mean, okay, I can't really say it's super mega bullish because we're in a weekly range. We might just break down. So, I mean, overall, it's bullish, but, we might just break the range. We're in the range. We might break range lows. And it, looks like a quite obvious trade to the downside, right?
Well, yes, but I don't see that on the lower time frames yet. We had a structure that what I just talked. We had that accumulation of various structures, but now it's switching. So as long as I have to follow what it's doing now, what it's telling me now, and what it's telling me now is it doesn't look like it wants to continue lower breakdown at all. Maybe that will change in a week, maybe in 2, 3. But right now, it looks very bullish. It's breaking that outside bar, and that tells me that it's likely to continue up. Maybe after some retracements, but going up is definitely the right bias given what happened at the end of Friday, at the end of the day.
I mean, look at this 4-hour right here. It's really pushing out. Yeah, look at that 1 hour. This is insane. I mean, that's a strong candle right here. You also have a double bottom right here. You have like a local double bottom. There's a lot of strength here. There's a lot of strength here, definitely, especially if this 1 hour candle closes like this. But I'll have to wait for the 4-hour candle. And I think, I mean, I think I'm just a victim of gold's randomness. Its volatility and the wicks and the randomness of its price action. I'd like to call it randomness. I know we got a lot of gold traders out there who obviously would not call it random. They have a good read on the market, but I kind of feel the same with Bitcoin. I mean, Bitcoin for me, I'm an investor in Bitcoin. I'm a long-term investor in Bitcoin, but a trader, not my type of price action on gold. And I feel like the same on gold as I feel with Bitcoin. It's just that Bitcoin is, I feel like it's all over the place. It doesn't respect the levels as well as major forex pairs. Almost like EU. I feel like EU can at times also be very messy, with price action just being all over the place. I've also found that the reload zone on EU doesn't work as well as other pairs. Maybe not the reload zone, but the way I'm trading with the break and retest does not work as well on EU. I have EU is I believe what the pair that I have lower win rate on compared to others.
Yeah, that's something. Price action is, if you have a system based on price action, it should work on every pair, but it's not going to be identical. There are going to be differences because the pairs, they do move differently. They have different, gold being more volatile, its wick are more pronounced, more exaggerated. That can change its performance if you're using the same strategy than compared to a not so volatile pair. But that goes to also ranging. You have pairs like Euro Pound that also likes to range a lot, and so just the strategy, even if it's based on price action, which should be universal, there will be some differences in how they perform on different pairs, especially as well if you have the difference between ranging and trending markets, right? On Forex, we tend to have more ranging assets, and on commodities and indices, you have more trending assets, and so the strategy will have different, any strategy will perform differently under different market conditions, and that's what you have probably seen, right? Your the same tools give you different results on EU than it does on other pairs that you're more profitable on.
Exactly. Let's see. Do I like this CAD CHF? It's a very okay. So it's a very strong reaction to this level here. That's 0.618. Yeah, that's the reload zone right there. So you have we have a daily setup here based on the reload zone, but it did not really. And I think we can add a 50 here, and I'll show you an example on the 50. Never mind. You know what? Like I already just go to reload zone. I feel like sometimes when I add a 50, it's just trying to look for confirmational bias. This would have been the trade, you know, if this is actually a good example. So you have the daily reload zone, and then if I add a fib from that high down to this low, you see that you have the reload zone up here, and that's the confluence right here, the 0.618 of the lower time frame fib with the higher time frame fib. This leads me to believe that, you know, this area up here, I would have loved to see a 4-hour come up here and then a 4-hour bearish engulfing candle up here. Just that would have been a really good trade to me. But sometimes you'll just have to let them go.
Yes, indeed. What we said at the beginning, right? Sometimes less is more. Being selective and taking those trades where the setup is screaming at you, take me, take me. Those are the ones you need to be taking, and not everything that looks vaguely like your setup, but the ones that are really screaming at you to execute them.
Yeah, Henry, this trade is too late. This one is gone, because what happens if price goes up to the to this level right now? Well, what you have is at that point you have a low, higher low, a high, and the higher high. So you're actually shorting an uptrend on the 4-hour. If price would have given you this, then you have a high and a lower high, and it's that lower high and potentially lower lows that you're trading. So it's important to understand market structure, you know, and making sure that you're not trading against the trade. What's your view on USD CHF? This is very interesting because I was actually discussing this with a student of mine, a USD trade that we're currently looking at. So on USD CHF, it looks way different because on the daily we have a level right here, and price has come up and kind of retested this level right here, and it's giving us this very nice rejection right here. So I'm actually I'm actually tempted in taking a trade based on this 4-hour candle close, and I think it's good to wait for the 4-hour candle close here, because then at that point it's going to be 2 hours after the Powell statement or Powell's testimony, which will give it enough time to absorb whatever he's saying. So if this candle closes around this area, then I would actually be even interested in this market selling this one right here down to that level for almost 1 hour. But I think I'm going to be left out on this one. I think it's too early to enter now. And one of the reasons why I feel like we really need good confirmation here is, so first of all, the weekly time frame. This was actually the example that I showed when I showed the reload zone. So the weekly example here, a weekly pin bar inside the reload zone followed by a bullish candle. This is quite bullish. I'm not looking at the weekly, I'm expecting price to move up here. Looking at the daily, we also have now a higher, we also have a higher high and potentially higher low. I'm expecting price to move higher looking at the daily. So it's only really the 4-hour where there's a rejection at resistance. So price might very well start moving like this, So I'm a little bit worried about that. The best types of trades are when you have the 4-hour, the daily, and the weekly aligning. If you have all those time frames aligning, that's the perfect trade. This is not the perfect trade, because what I'm doing here is I'm shorting one of the most beautiful weekly pin bars there is on the history of USD and that's that's going to be another trade that's better. We got GPAD here, and guys, that be selective. Be selective. If I would be actually doing the things that I recommend you guys to be doing, I would be so much more profitable. Okay, I would be so much more profitable. I say, I've been going back and forth, like, should I take this trade? Should I not take this trade? And I shouldn't take this trade. I know I shouldn't take this trade. But there's still a chance that I'm going to take the trade. So actually, doing the right things is not as easy as it sounds. Let's take a quick look at GBPAD. And Victor, actually, I think we're going to do this one, and then unless you have something to share, it's time to
wrap up.
Time to start wrapping up the live stream here. And this is great. Limitless saying he's also waiting for the weekly and daily to align. So I think that's or this trend to align with the daily and weekly. And I think that's great. GBP AUD. What is my bias on GBP AUD? Yeah. So what we're doing right now is we're testing the weekly range lows right here. We have a fairly bullish reaction on the weekly to a support level. We're looking at the daily, and we're starting to form the same type of price action we had here is the same type of price action we're starting to form here. And I am going to look at trading the exact same structure. A break above this level, and then look to take it to the next level. So I want to see a break above that level on the daily. I want to see a daily close above this level. And when I have a daily close above that level, that's when I will start looking for a break and retest on the 4 hours. So that's the level, daily close above, maybe something like, something like this, and I'll then look at a retest of that daily breakout level for a move perhaps up here. So that's GBP AUD. Right now I'm biased to the I want to look for longs here, but of course I'm not married to any direction. I'm just going to enter when price action confirms that. All right, that's it for me. Victor, do you have anything else you want to share before we wrap this up?
I can do the same pair, pound Aussie dollar. As you were analyzing it, I was doing it on my side as well. And let me show you. And that's for some variation. I have to be honest, I wasn't paying attention to exactly what you said. So I don't know if what I say is going to be in the same direction, because I was focusing on doing the same pair or analyzing the same pair. So let's look at the weekly. What I have is a, well, let's start with the monthly. We have a bearish order block that is still at play, right? And on the lower time frames, it reacted to a very nice order block here on the weekly, right? Lower than the monthly. And if even on the higher time frames, you can see some before that we had a bearish order block, right? Price formed it, came back all the way. It wasn't fresh anymore. But as it came back, what does it do? It forms another bearish order block on the monthly, right? That tells us something. There's a pattern there, right? So the market is either decelerating and maybe reversing to the other side. But let's look at the lower time frames. What do we see? We see it does the same, right? It forms that order block, moves away, comes back, rejects it, and then starts going lower again, and making in the process makes lower highs and lower lows as it is going. So that whatever that was in here pushed it into a downtrend again. If we do that on, and if I do that with a quasi, we see a left shoulder head break of the structure. That's the first right shoulder. If you were to have been in this trade, you would be trading it from this area, right? That's the order block, and that's where it went. I'm going to take this quasi away. That's where it went to. That's the area I want to be shorting, and I would have want to get it at the end of that swing. Goes through it and goes even much lower, leaving another order block there, comes back to retest it and moves away from it. So far, it's moving perfect, very technically clear in terms of what it wants to do. It is telling us by showing those order blocks, calming them to retest them, and moves away from it. All right, the next question is, if this is happening, okay, it already made the move that we were expecting for it to move, right? It formed that order block, went into it, and moves away from it. Now, the thing is, we don't have an order block here on the weekly for it to move away from, right? To go up again. And it did not take this low, right? So that is still to be seen if it is going to do that or not. I don't know that. But if you go to lower time frames, what do we see? We see it, although it did break this, right? This is the neckline on the daily, right? So that's the daily quasi. So we have when this happened, it made a higher high, so it's breaking on this time frame. It's breaking with the market structure, goes back, and it reacts to this order book. That's an outside bar, right? See that? I mean, this one, right? Those two candles, that forming the daily outside bar. And what does it do? It comes back all the way, it forms it, goes away, takes out the high, making a higher high, coming back. So you have a quasi. This is the quasi, right? Right? Taking that high, taking that neckline, and then coming back for that retracement into some demand area. That's exactly how I trade all the time, right? It comes back and it is unable to close below it, right? It had a gap, but it never closed below it. So this order block served very neatly for a demand area for price to push from. So that is something that I'm thinking, okay, it looks like price wants to go and start a new trend on the daily. And if this is were to be the case, we are getting in at the very beginning of that trend. So that's very interesting. If you go to the lower time frames, but remember, do remember, we were so far on the higher time frame, we're still in lower highs and lower lows. So the market structure does not confirm that we are on the higher time frame. We're not on a bullish trend yet. However, on the daily, we can see a reversal pattern. And if we go to the lower time frames, let's say the 4 hourly, we don't, the quasi, the neckline of the quasi is here on the H4. So we haven't formed that quasi pattern yet. Okay. We haven't, so we switched on the daily, but not on the 4 hourly. But there is a case to be made for a move up, because this is an order block on top of another one, on top of another one, on top of another one. Very, very clear to me, right? Price is moving away. Let me show that with an arrow. It forms that order block, moves away, comes back, retests this order block, forms another order block, moves away, come back, retests it, forms another order block, and so forth, right? So this is very clear that this is shifting. This is bullish order flow. If it is going to go lower, should not be forming bullish order flow, right? So this looks promising. We'll have to, it still has to take out this high. You could also argue that there is another neckline here. It's not the extreme neckline, but this one is of another quasi, which is, let's see if it is. No, it's not valid. I'm sorry. That's in my book. I wouldn't take the neckline there. So this is the only neckline that I have. It needs to break this first, and then either if I'm going to be taking it on the H4, I wait for it to come to some order block it left behind, then go on with the trade. So it teaches you the same thing as you mentioned, Jonatan, that by doing the quasi, I have a specific step plan that price needs to follow on. If it doesn't follow, I discard the plan, right? And that makes me helps me to be more disciplined with the entries, because it needs to break this first and then come back, and only then it's a trade for me. But this is looking very interesting on the daily. I mean, if you were to get a entry here and you're able to, drive it to the next structure will of course be this. But if you're thinking it's shifting to the upside, it's going to make a higher high. How is it going to make a higher high? By taking out this high, of course. So that could be, if you are, I don't know, if you were able to catch it on an intraday trade, something like the 10, you can see already how that catapults your equity curve into the stars if you're able to catch this, right? That's it for me.
All right, that's a really good, and I think it kind of aligns with my idea as well. We are seeing a gold running higher as well, but I think it's time to wrap this up. I would like to thank you all for joining us here today. We have some obviously some strong volatility going on right here. We just highly recommend that you guys wait. I would wait at least 30 minutes before making a trading decision. What I'm going to do is I'm not going to look at the screens until the 4-hour candle is closed before I make any decision based on the moves that we're seeing right now. All right, Victor, anything you want to add before we end this?
We are currently in the high impact news restriction. So you're not allowed to execute, not allowed to open the trade if you are on the high stakes account, the program, right, on the 5ers. If you are, you still have to wait another minute or so to open. If you do, it's going to be a violation.
All right, beautiful. Remember that. Tomorrow we are going to have Anastasia on, which is a Ukrainian trader. She's funded with the 5ers, and she's coming on to talk about her trading and the way she's trading, and hopefully show us a thing or two that we might learn from. All right, guys. See you guys tomorrow. Take care.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at the